All right. How you guys doing today? It's your favorite homeless investor, Jonah Fury. But without further ado, guys, we have some serious stuff to go over today. Donald Trump has proposed these steel tariffs, and there's just a lot of repercussions that could be caused by it. And I'm going to explain thoroughly what could happen and how you need to start preparing for any of this that could happen. But first things first, let's just talk about how much steel we use as the US. So it's 70-30, right? 70% of the steel that we use in America is from America. So whenever the steel tariffs would first go through, it's not going to be that big on the price. Steel prices here are definitely going to go up, so if you're looking to invest and stuff like that, I would definitely look into that. But 30% comes from imports, so the tariff isn't going to be that big of a deal. Where the problem is over here whenever it comes to a business and how expensive it is to run. So if the steel prices in the US, which most of ours comes from, skyrocket because we have tariffs on imports, because nobody's going to want to import their steel if it's cheaper here. But if both of those prices keep bouncing off of each other and rising, the problem is the product price is going to go up, right? Obviously, which means the resource price is going to go up, which is just a problem for the economy in the first place, because if the resource price goes up and the income of consumers isn't going up, and they're still buying a product which price is going up due to the fact that the resource price is going up, and neither the income is rising or dropping, it's slowly inching up and not as fast as the product price, you end up with no consumption. People aren't going to be buying anything if everything's getting stupid expensive, which means businesses aren't going to be making money, which will lead to them laying them off into a giant vicious cycle. Once people get laid off, it's going to lead to even more no consumption, because people are going to be even more conservative with their money. They're not stupid. But once they get laid off, they're not going to be spending money as lavishly as they were in the first place. And the problem is product prices are still increasing. For example, the freaking iPhone, right? Was it about $1,000 without tax? If you look at the average median salary, which isn't even majority of the people, but if you look at the average median salary around $50,000, that is 2% of your average salary on a good that's not it's arguably needed in today's society, but not needed in today's society. That type is not needed in today's society. And the product prices are still rising. That's just an example, and how this could lead into a giant flow into an economic crash. So next thing, let's look into the business cycle of the US, right? This is actually how it looks normally. We've got the average increase. This is why it's safe to long-term invest in stocks, because the average real GDP is always rising, technically. But the thing is, when you look at the real GDP, the expansion phases, which the part where everybody's growing, which you're in right now, are typically longer, which is why the average growth is constantly going up. But we're sitting here at a peak. I believe we're sitting here at a peak. The bull market can't be this much longer, because a decade is a ridiculous amount of time, which also leads me to the idea that there's a crash coming. It has to, at least a recession, small correction in the market. Not even small, I think this could be huge. But because we've been on the back end of a bull market for about a decade now, we're bound for a recession. We're just bound for a recession. And in economics, things that can cause a recession are economic shocks. For example, a tariff of 25%. And what this could even lead to, which I don't know if you guys have seen, but Donald Trump has been tweeting, for example, and also, this guy wants to get into a tariff war with other countries, which could lead to an even bigger economic shock, which could which will start this cycle in the first place. Whenever he releases these tariffs, it's going to be more expensive to import, right? Which means the demand for steel here will increase, correct? So the demand for this is going to go up. The demand for this is going to go down. This is basic economics, because this is going to be more expensive. So businesses are going to want to come here, which means the steel prices are going to increase because it's in the business favor to make more money off of the demand increase. So with this increasing, it's going to make the resource prices be more expensive because steel becomes more expensive, just because they want to get into a tariff war. And if the resources increase compounded with the price of products still increasing, because that's a key aspect of us being in an expansion phase in the economy, that's going to end up being in the income, end up hurting the income, because prices of products are rising faster than the prices, the prices of products are rising faster than the income of a consumer, which is another reason why we end up going into a recession, typically, according to economics. So if the income is not increasing and the product price is still going to increase due to demand, and then the price of the steel increasing, is going to lead to no consumption, which will lead to businesses not making money, which will lead to them laying people off, into a vicious cycle of no more consumption, into no more money, into no more people having work. Unemployment rates will skyrocket and things of that nature. So as you guys have already seen, if you're an investor, you've already seen the stock market fluctuate just on the idea of these tariffs being there. But what's even worse, even if these tariffs are nullified by the fact that most of our imports are here, I know the demand's going to go up. It's just how economics is. So if you want to invest in our steel right now, I'd definitely invest in our steel right now. It might already be up, it might already be reflected into the price, but I'm not sure. Look into that. That's definitely a good investment over the next couple weeks if the tariffs go through. So this is all hypothetical. The tariffs still haven't gone through, but considering that China and EU all have 50% tariffs already in place, 25% tariff makes it look not that bad, but 25% is huge. And that's just going to lead to this, to this, to this, which I've already explained. And these are all signs of an expansion going into a recession. These are all things that happen. Because as the price of products are rising, because that's the interest of the business, they want to make more money because they want to benefit off of the economy growing, right? So the prices of things are going to go up, hence $1,000 freaking cellular device, and income isn't rising. So people aren't going to have any incentive to go and buy the iPhone if their income isn't even rising. So when the income not rising, no consumption, into a vicious cycle. And this will lead us into a recession, into unemployment, and the stock market's going to crash because all the businesses, it's going to be more expensive for them to run. And these are just, there's so much happening in the next couple weeks, guys, and I hope you guys are all prepared for this. So basically, guys, if you have been watching the news, be very careful in the stock market right now. Be very careful. Don't be emotional or anything like that. Keep some cash on the side. Be really cash rich in your portfolios. Because in the next couple weeks, regardless if this tariff is even passed, there's going to be huge volatility in the stock market. What if China decides to get into a tariff war with us, right? It's going to make it harder for us to import more goods from there. Who imports from China? Huge companies like Amazon, huge companies like Apple, all of them get a lot of their products because it's cheaper to outsource it. If they put any kind of tariffs on anything like that, we're screwed. Because, like I said, this is basic economics. Resource price is going to go up. We're in an expansion phase in the economy, which means the product prices of things are always going to be going up in this phase. The problem is our income isn't going up in this phase, which will lead to no consumption, no businesses making money, laying people off, which will lead to more no consumption, businesses in a recession overall. Especially if we get into this back and forth tariff war with China or any other country over there. So that's basically all I wanted to leave you guys with. Be careful, have cash on hand to make money off of those dips that are going to happen in the next couple of weeks regardless. Mark my words. And you guys just keep grinding and keep growing.